Good afternoon, everyone. Welcome. Good afternoon, Lisa. Good afternoon, Francis. Welcome to today's episode of Live Session. Let me know if you can hear me loud and clear. Hi Bongani, hi Tembi. Good afternoon, Trisha. Welcome. You're all welcome. Let me know if you can hear me on the other side. Okay, great. Yes, let's look at some charts and see what we can find. But before I do that, I'm going to just go over the strategy that we use here. The simple but powerful strategy we use here. Good afternoon, Lindy. Good afternoon, Tembi. Okay, so before I start, I'll just go over our simple but powerful strategy we use to make money every day. So over here I have just 3 moving averages. These are the tools we use for trading. These are the tools we use to guide us to make some profit in the markets. So I'll start by just going over this. Just want our eye to be used to picking this out whenever we attempt to trade. So as we know, the blue line, which is the 20 simple moving average, is our trend guide. It is our trend guide. So whenever we see the 20 moving average, the blue line here, above the 200, the red line, we aim to buy. That is, the market is in an uptrend, so we aim to buy to follow where price is going. So if the 20 moving average is rising, we also buy. We buy the whatever symbol we are on, because this strategy works on any symbol that you choose to trade. So when you come on the chart and then you see the blue line rising, that means you are going to buy to go up. You are going to bet to go up. When the blue line is down, going down, you are going to bet to go down or sell or go short. So now it's over here as this illustration. The moving average is on the rise. price. So we aim to buy. We follow price as it goes. So, and this area happens to be the narrow zone. So if you're in the narrow zone, that's where the best opportunities happens. That's where most of the best moves start from. So we look out for some events happening at the narrow states. Then we follow it as price makes its way up. So at the narrow states, you can have price going to the downside, that's in a downtrend, or you can have price going to the upside. But currently we can see price is going to the upside as the blue line is pointing up. So if we see the blue line pointing up, we buy to go up. We follow the trend, what the trend is doing. That's exactly what we follow. We don't trade against the 20 moving average. Anytime we sit down to trade, we are trading with the 20 moving average, which is this blue line. Right, so with that said, anytime you want to have an ideal condition to trade on the upside, all you have to make sure is the moving average, the price are all above the 200 moving average. So the 20 moving average takes the last 20 candles that was printed and then plot it on the chart for us to show us where the likely direction that the price is going. So that's what the 20 moving average does. Then we also have the 50 moving average, which also takes the last 50 candles that was printed. So I'm on the 2-minute time frame now. So when you talk of the last 50 candles that was printed, sorry guys. So when you talk of the 50 moving average, you're talking of the last 50 candles that was printed in relation to the 2-minute time frame. That's what will give you either it's pointing up or going down. And then we have the 200 moving average. So the 50 is more or less a medium term, and the 20 is for short term, and the 200 is for a long term. So it counts for the last 200 candles. Then based on that, it calculates the average and then plot it on the chart for us. So here I've taken the candles off just to make things clear and simple, as we are dealing with price action, and then we are dealing with a simple but powerful strategy that we have here. So with that said, price moves from the narrow zone or the narrow state to a wide state. As we can see, when you say narrow states, that's where all the four items, that's the price, the blue line, the red line, and the yellow line, they all come together in a location, at a particular location, as we can see here. So this is what we refer to as the narrow state, where we can see all of them together. So from this point on, if you're able to pick out an event from here going up, then you'll be riding with the trend, with the uptrend going up. And as I've said before, when we have the blue line coming towards almost a flat 200 moving average, it's very powerful. That's most of the time. That's the time that you can find that the blue line crosses above to go on the upside. So that's exactly what happened here. And this happens to be the narrow state as well. So from the narrow state, which is the N, we go to the wide state. So as I said, this is the wide state as well. So from the wide state, price always come back to the narrow state again, and then from narrow states it moves to the wide states. That is how price moves. So our duty as traders is, whenever we sit to trade, we have to identify which direction are the moving averages pointing to, which states are the moving averages are in. If they are in a narrow state, then you are looking to either price going to a wide state. So that's why we look out for an event there to go into the wide state. So when price is in the narrow state, it can either be, when price is in the narrow state, it can either be going downwards, or it can either be going downwards or going up. As over here we have price moving to the upside, moving to the upside. So you have to look out and identify which state is price in at the time that you sit down to trade. So as I said, price moves from the narrow state to the wide state, then come back to the narrow state, then look out to go to the wide state again. That is how it moves. So all we have to do is to identify some events happening in the narrow states, which happens to be the ideal place to go in for either a buy or a sell. So that is the basic brain behind this strategy. So as we go on with it, we shall find some examples, and now I'm going to add the candlesticks onto the chart so that we can make it much clearer. So as we see here, price came from this high, made these lows, and then turned round, going to the upside. So this is where we talk of it being in the narrow state, where we have price, the moving averages all together in a particular area. We have a narrow state here as well. So this is where we look out for some events to either go to the upside or to the downside. So over here we have a wide state. Price was in the narrow state. Then from the narrow state it made all this beautiful move all the way up here, creating a wide state. So from this wide state, price made its way back to the 200 moving average, where all the four tools, the charts, the three moving averages met together again, and then from there price moved back to the wide states. It began its wide state from the narrow states. So currently we have price all the way up here, So now looking at it, this is US 30, has hit its key level and then pulled back. So it moved from one key level, as we also talked about these key levels. It moved from this key level to the next key level, and now it's kind of pulling back to the narrow states. So that is how we look out for opportunities. That is how we look out for trades. And every opportunity we see, every opportunity we want to take advantage of, it should be near the 20 moving average. It should be near the 20 moving average. So this is wide away. So when you take a position in the narrow state, you take your profit on the wide states. When it's in the wide state, you take your profits. So as we can see, price is on the uprise. It's moving up. So when it's moving up, you don't want to trade against the 20 moving average. So you look for buy positions to ride with the trend. you look for buy positions to ride with the trend. Is it clear enough again? Is it a refresher moment for us? If it brings you some light bulbs moments, just put in some fire, some love in the chat. Let's see how, if it's clear, it's what I've just gone through has been made much clearer to you again. Put in some fire in the chats, let it bubble. Okay, so now let's look out to see if we can find something to hop on this afternoon. So we are on US 30. So as I said, it's already been to this high and it's pulling back. So just as we already know, those of us who are already been with me for this time, you know what you look out for anytime you sit behind your screen. So if you took out these trades when it gave us the event, this is an area you should have taken your profit before it started pulling back. So the moment the last green candle was taken out, that is where you look out to take your profits. You look out to bag your profits and wait for the next opportunity that will come up. Great. Let's see what's happening on NAS. Yeah. So you see the opening was a bit messy. So in any way, if you look, we are on a 2-minute time frame. So if you look at this area of support where price came just below it a little bit and got taken out by this bull power candle, it took the last purple candle here, as we see, it took it out, and then you can see how powerful it's moving up. So with that said, this happens to be in the narrow zone or narrow states. So you could have gotten into this trade here and then had a ride up to this high. So this high, I think it's near to the next or closer to our next key level. Our next key level, the key levels we spoke about. Okay, it still got some room to move. So in the morning, price was somewhere here. Price was somewhere around this after it made this big move. So I was explaining to someone that our next key level we are looking at for is the 950 level, which is this area. And looking at it, it's almost covered more than half of it. I think it's just left about 20 or 30% to hit that key level before this pullback. But again, if you were in this trade and it gave you this profit and you saw this pullback, you would have popped out, jumped out of it just to save that profit, and then look for another opportunity. Since we anticipate it's going to go up to the next key level, because if we look at the daily, last week or earlier this week it was pointing down. We have the daily chart here. So price from this narrow state on the daily time frame went all the way to this wide state, and then as we learned earlier on, when price is in the wide state, it loves to come back to the narrow states to gather some momentum, to gather some power, to push up and make new highs. Make new highs if it is on an uptrend. Gather some momentum to push up and then make some new highs. So over here, as I said, this is our daily time frame to give us a broader view of what is happening, and we can see clearly that the price is in an uptrend, making higher highs and then higher lows, higher high, higher lows, higher high, and then higher lows. That is one characteristics of an uptrend. That is one characteristics of an uptrend. So if you are analyzing a chart and then you can see or you can identify that price is making higher highs and then higher lows. Let me draw it out so that it will be much clearer as I say it. Oh, I got a whole lot of this on the screen. Let me clear it out a little bit. Okay, let's see if we can get some space around here. Okay, so what I just want to show you is this price moving up, pulling back, moving up, pulling back, moving up, pulling back, moving up. So when there is an uptrend, this is how price moves. It pushes up to make a high, so this is where we call it higher high. H and H, higher high. Sorry, don't mind my drawing. So we have higher high here, and then we have higher low. Higher low here. Higher low. So the same thing repeats itself over and over again. The same thing repeats itself over and over again. So the reason why we call it higher high is because if you compare this high to the next high it's made, this is higher than the previous high. So we call it higher high. And then if you compare this higher low, there is a low point here. So this low point it created is higher than this low here. Let me use the next one as a good example. So this is a higher low point and this is a higher high point. So if we compare this with this one, we have a higher point than this one, so it is a higher high. And then over here we have price pulling back to make this low point. So this low point is high, but still it is a low point. It's a high low point comparing this low point with this previous low point. So it is a higher low point. That's why we call it higher low. Higher high at the top here, lower higher low at the bottom here. So that is the characteristics of an uptrend. So when you are analyzing your charts and then you identify something like this, price making higher high, it pulls back, making higher high, it pulls back, then that confirms that you are facing an uptrend. So the best thing you can do is when it pulls back to the higher low, that is where you look out for an opportunity, you look out for an event to join and go up. So at this point, it will be most likely nearer to the blue line, most likely nearer to this 20 moving average. So that is where you look out to enter for a buy. Okay, so that's good. I believe I've explained it good enough for us all to understand this. And when you talk of, okay, I will do the opposite one, which to also give us a picture of what we will look out when there is a downtrend. Yeah, let me delete this one. So whilst I'm going through this, if there's anything cooking up on our pairs that we trade on, NAS, US 30, you can pop it in the chat and draw my attention. but I just want to go through this to give some understanding for us as we trade this strategy. Okay, so in an opposite direction, let's say price is coming from here, it gets to this point, pull up to here, it gets to this point, pull up to here, gets to this point, pull up to here, and then drops to this point. So over here we have the opposite of the uptrend. So now we're looking at a downtrend where we have price coming from the wide states, making its way down. So if it makes its way down, it creates a lower low, and then this point becomes a higher low. It creates lower low here, and then this point becomes higher low. This point is lower low, lower low, and then we have here being a higher low, higher low. So the same thing that I was explaining, but in a reverse form. So if we compare this high to this high is lower than this. In the same way, if we compare this low that price created, compare it with this one, this low is lower than this here. So this is the lower low, this is the higher high, this is the lower low, and then this is the higher high. And that is one characteristics of a downtrend. When price is moving downwards, that is what you look out for to confirm that there seems to be a change in direction here. Price has started making lower lows and making higher lows. So that pre-suggests to me that there is a reversal in the markets. Price has turned around to go down in its move, in its upward move. So we look out for some of these things as we engage in this venture, this trading venture. I believe that makes things clear. So as I was saying, we look at it on the charts. We'll look at it on the charts and then we'll know what I was talking about. So from this low point, oops, we have all there. From this low point, price moved here and then pulled back, forming a higher low, and then it pushed up again to form a higher high, pushed back down to form a higher low, and then again. So this is a much the real picture as we have it on the charts. Don't mind my numerous lines I have here. I believe you can see through. Let me take off this. I believe we can see through it and then get the understanding. Okay, so I'll hop back on the 2-minute time frame. Just a moment. Let's take this off. Hop back on the 2-minute time frame. Our income making time frame. All right, it looks like we missed out on this. So as price pulled back, this is an entry for us. It took out this last candle here. We could have hopped on this trade going to the upside. Could have hopped on it. Anyway, we'll look for the next one. We look for the next one. let's see what's happening on NAS. Then I'll go through. Okay, okay, US 30. I mean US 30. I mean, so we can see US 30 is here at the moment. It's being held up by the 50 MA, 50 moving average. So we'll just hold on a bit. If it takes out this last purple candle, we can hop onto it. Yeah, looking at it, it's taking it out, but I want to see a little bit more of it. This is US 30. It can move like crazy. So nevertheless, this is an upward trend, so I will go ahead and put in a position here, and then my stop loss will be below here, and see what will happen. And then my take profits one will be up this high, yeah. So one thing I also want to draw our minds onto is when we are trading, whenever the blue line crosses above, we can see price is from the narrow states, price is above the 200 moving average. This red line, price is above the 200 moving average, and we can see clearly that the red line is uprising. That tells us we are in an uptrend. So in this uptrend, whenever we see the blue line crossing above the 50 MA, we expect something. What we expect is we expect price to pull back to the moving average again. Then when we have that pullback, we look out for an event to go to the upside. So here we could have gotten in here to this level, and then the best opportunity we had here is price pulling to this low, and then price took out the last purple candle here. So when this happened, we could have jumped into it. I believe those of us who were looking at it would have taken this trade as it began. So over here again, we can see that the moving average, the blue moving average, crossed above the yellow moving average. So again, we expect price to pull back. So when this is happening, all this happening here, we should have it with the understanding of price pulling back as a result of this crossover. As a result of this crossover. And another crossover was here. So all this happening here, we will classify it as a result of this crossover, and price pulled back to the moving average and then began its upward move again. So over here, if you were in a trade down here, even though the US market open time pulled price a little bit low, if perhaps you were trailing your profits, this would have taken you out of the trade anyway. Then you could have taken another entry when price got taken out. The last purple candle taken out by this green candle here. When this happened, when this event happened, this is where you would have gotten into the trade to have to ride it to the upside. Yeah, sometimes I just stay away from the US market times because things don't play out as calmly as we have here, because during that time there's a high volatility, so price keeps on moving up and down. So if you enter a trade here and then you put your stop loss below here, you will be easily kicked out because of the high volatility we have in the market, because of the high volatility we have in the market. It looks like price is pulling back quite a bit. So I got in a little bit early. So if you are not okay with that, you can just wait as price gets above the 20 moving average. Once price gets above the 20 moving average and it gives you an event there, you can take it from there. You can take it from there. I'll just push this down a little bit to see if just below here, to give it a little bit room to run. If not, I get kicked out. Look for another one, as that is all part of trading. We can't do away with it. And just as I always say, when you take in a position, you honestly don't know what is going to happen. That is why we keep our stop loss in place. So for instance, that stop loss we put in place, if the event at which we picked on or identified is no longer valid, there is no point staying in the trade. So that's why we keep our stop loss there, which is the maximum loss per trade. So that maximum loss per trade we calculate, that's what we put there. So sometimes the maximum loss per trade, you don't have to use all of it. Sometimes you can put it just below that maximum you put, but at a point where it needs a little bit more room, you can use the maximum loss per trade and for that particular trade. So if, let's say for instance, you entered here, let's say for instance you entered on this trade here, and then your maximum loss per trade is at this level. You can either put your stop loss anywhere from this level to this level, from this level. So over here is your maximum loss per trade that you identify or you calculate. So in a situation where you have a better entry, you can reduce that risk to a lower risk as a result of you being in a better entry. I hope that is clear. Okay. So, as I always say, if I enter a trade, because all we are doing is we are taking trades based on it having high probability that is going to follow through to the direction that we've picked. So here, if we consider, or if we go through the PCT test there, or entry test, price over here, as I said before, it's in between. The reason why I entered on here is because price is in between these two moving averages. It's in between these two moving averages, so it's still in the zone. And then when we talk of the 20 moving average, it's not just this single skinny line. It's an area, it's a zone. So long as price is within that zone, you consider it to be in the zone of the 20 moving average. So knowing that this is on uptrend, and then price being held up here by the 50 moving average, that is the reason for taking this trade early. As I said, if you don't want to get in so early, if you just want to be more cautious, you just enter as price gets above the 20 moving average. I believe that is clear. So let's see now what it's doing here. Yeah, looks like we got kicked out on the other trade. Yeah, the stop loss got activated. All right, so that is all part of it. All part of it. Sometimes the move, it will take a bit of time before it begins to work out. So we are just coming from the opening time as a result of this high volatility that has been in the market. I prefer to trade when things have calmed down and things are moving smoothly in one direction. That is the time that I love to get into it. Like over here, price pulled to the moving average. It gave this nice beautiful setup and then gave us this profit. So here, if you're in this trade, the moment this purple candle takes out the green candle, you get out. Or once you see this wick up here, you could get out before it takes away your gain profit. So now, as we can see, price is in an upward trend, so we ignore these purple candles. Our aim is to get a setup to go up. So we wait and see. So guys, if you use the right lot size based on your account size, and then you go in by using the right maximum loss per trade, these drawdowns you might encounter can easily be recovered once you get into a good move. Yeah, so over here we can see this move started from here, or it was here over way below the moving average, but it was in the zone. So you could have taken it as price took out this last purple candle, so you would have gotten into this move all the way up here. So here it's an area of support, resistance from the below. Now it crossed above it, became support, so price got held above this area of support. So if you got into it earlier on, you would have enjoyed all this move up here, up there. So we'll just see what comes out. So as we see here, talking about the narrow state, wide state, narrow state, wide state, price moved from this narrow state to this wide state, and now it's pushing back to the narrow state again. Then prepare itself to move to the wide state if it wants to continue going to the north. But currently price is below the 20 moving average and just above the 200. So it's still in the bull markets as price is above the 200. Moving averages are above the 200, so we are still in the bull markets. If we get them below here, then we can say it's changed direction to the bear markets. But now we believe this is a pullback for price to get to the narrow zone and then, or the narrow state, and then make its way up again. Yeah. Any questions? Or you have a pair that your eye is on it, you can pop it in the chat. Let's have a look at it. So this is gold. I know some of us trade on gold. This is gold here. It's been in the sell zone for some time. So it's, as we can see clearly, it's coming from the narrow states here, as we saw price come together with the moving averages, the narrow state here. So if we're going through the tests, the PCT test, and as I said, this is the best area to look or to get an entry. The best area to get an entry, because at the narrow states, that's where bigger moves begin. That's where bigger moves begins. So from this here, price is below the 200. 20 moving average falling below the 200 moving average, and then 50 also below. So this happens to be an ideal condition for a sell. This gives us an ideal condition for a sell. So here the entry would have been on this candle, as this purple candle took out this green candle. Then your stop loss goes above here. So if this condition or this event that we took our entry on based on this event, if it no longer exists, if it's no longer valid, and price turns round to the opposite side, we take ourselves out of the trade by putting the stop loss there. Guys, it is very important to use your stop losses, because that is what will keep you in this game for a long time to come. If you don't do that, and then for instance you take in some high drawdowns, which could result half of your account gone. If you are using a funded account, which could take you close to your maximum daily drawdown. And I don't want that to happen to us. So if we look for the right location, we look for the right area, the right states. This is the narrow states, and price is below the 20 moving average, and price is near the 20 moving average. We have all the points ticked, or at least two of them tick. So we have P, which stands for where price is, the position of price, and also the location of price, if it is near the 20 moving average or it's wide away. When it's wide away like this, we stay away. We are not going to enter a sell here. At this point, we take our profit. We enter a sell here, take our profit here. When price comes near to the moving average, that is where we take a position to ride it down. So when it comes to the wide states, we take our profits. Near, we enter. Wide state, we take our profits. That is how we play this. That is how we play this game. Is it making sense, guys? I know some of you already know this, but I'm just going over this over and over again. Repetition is what we are on about here, and that's what we do all day long anyway when we are trading. That's what we do. The same thing, we force the trade through our trading plan. So we should have a trading plan, and we should have a system or a process that we go through. So each trade, each opportunity we identify that we want to trade, we force it through the process. So if it doesn't fit in the process, we let go of the opportunity. We let go. We only force it through the process. So if the position is not right, the location is not right, there's no color dominant, and there's no trend, you leave it. Or if you get 2 out of 3, perfect. If the position is not right, the location is not right, the color dominant is not there, you stay away from it. You wait until you get a better opportunity. Yeah, so guys, I'm not so much interested of us having some if we get the good move, we can jump on, but what I want to do is to equip you with a skill that you need, that you can fish by yourself, rather than me calling out signals for you. I'm not interested in that. My aim is to equip you with a skill that you can stand on your own and do this by yourself, whether someone is there to look at it for you or there's no one. Once you get a skill, once you become that consistently profitable trader, no matter where you are, no matter what you do, you can still rise up and then get yourself into consistently winning in this game. That is my aim. So if we meet here and then I'm not pointing out that let's get in, or we get into one or two trades and it doesn't work out, that's not the end of it. That's not the end of it at all. So the trades that we take here, sometimes, or mostly when we get on here, it's like the best time that we don't get the best moves, but what is important here is you knowing the process and picking up the trades when they are in the right location, when they are in the right position. That's all that you need. That is all that we need. And also, we also don't need to trade all the time, because if not, the profit that we have already accumulated will end up giving it away. We have to learn. This is a business, guys. We have to learn to keep our profits. We have to learn to keep our profits. And to do that, we also have to limit the amount of time we spend in the market. Because the more you spend more time in the market trying to find a trade or a move to get into it, the higher the risk of you losing what you have already accumulated. That's why it's good to get into trading at the time that there's nice moves in the market. So whatever pair you are trading, just look out for the best time to trade that pair. Do some back testing on it and identify the best times that pair moves in the market, so that you can capitalize on it, position yourself and strike when the moment comes. I believe that is making sense to you guys. I believe it's making sense to you guys. We are not here to make money and then give it all back. We are here to make money and keep it. So whatever might be an issue, whatever might be a reason for us not being able to keep it, we cut it off. We cut it off. Yeah. So we are here. If we see a good opportunity to get in, we will hop on. If it's not that good, we'll leave it. I'm not interested to force a trade when there's really not a good time to get into it. I feel much better if we get into the right trades and then have a ride with it. So this is gold. As we can see, gold has been in the gold came from the narrow state and then came to this wide state. And now it looks like it's making its way back. This is the wide state, so it's making its way back to the narrow states. As we can see, it's a downtrend. So I've said over and over again, in a downtrend, our aim is to sell in the markets. We go with what the big boys are doing. The big players in the markets, if they are selling, we also want to look for a position to sell and follow them, not that we do against them. Yeah. So this position, as it's going back here, it's a counter trend trade. So the trend is down. So if you hop onto this going up, it's a counter trend. It may work, but you should know that you are in a much riskier position than flowing with the flow of things. Yes, price, I can see price above the 20 moving average, but again we can see that it's in a downtrend. Price is still below the 200 and it's just gone above it. So if you are okay, you know what you are doing, you can maybe take advantage of some of these moves. But with that said, it's better to flow with the trend than going against the trend. And one of our rules is never to trade against the 20 moving average. This blue line is the 20 moving average. You are not supposed to trade against the 20 moving average. You have to trade with the 20 moving average. If it's going down, you trade with it going down. If it's going up, you trade with it going up. So as I said, this is above the 20 moving average. You can see that it has started arching up. So the best scenario is you waiting for price to get above the 200, then that gives you an uptrend, then you can follow it there. But now as it is, you see how price pulled all the way to this yellow line. It gets held up in the yellow line here, but here, yes, it's gone above it, but still it's in the downtrend mood. There's a possibility that it can turn around and then push down whilst you are looking for it to go up. So that is why it's always good to stay away from counter trend trading. The same thing we had here. Price started pushing down here and then turned around going up. So you would have said, oh, it's beginning to do an uptrend now. But mind you, this is still below the 200 moving average. So the downtrend is still on. The downtrend is still on. Yeah. Looks like today I'm talking a lot. Okay, let's look out for something. Is there any pair you want us to look at? You can put it in the chat and then I will look at it for us all. For us all. So this is NAS 100. It pulled back into the narrow zone, hitting on the 200 moving average. 200 moving average at the moment is acting as a level of support for price. It's acting as a level of support for price. So as we monitor this, this is kind of pulled down out below the 50 moving average as well. So I would rather wait until it crosses above 50 or just near to the 20 moving average, then I will consider a buy going up. Entering here might be a little bit risky. That is if it tends to continue going down. If not and it goes up, yes, you would have gotten an early entry, but you also put yourself in danger if it doesn't work out that way. Wow, we've already done 1 hour. I see time runs so fast. So whilst we are waiting for this to play out, you can some of you can keep your eyes on it and maybe give me a shout if we can spot the opportunity before it runs off. We take advantage of it. So guys, this is NAS. As I said, most of my trades I get on my decks early in the morning by 6, or from 5:30, 6. I'm already on my charts looking out for opportunities. So that is the time I've identified that in the morning it's the movement kind of begins from there. So if we look at what's happened this morning, where is this morning? So we have 7 here, 6 here. So this area that I've circled, from all this, it happens to be in the narrow zone. So if you get any position here in the narrow zone, see what happened. Gave us all these profits. And then as it moved into the wide states, gave us all these beautiful profits. Beautiful profit. So let's see how many pips is that. So it's the same thing that we talked about over and over. Repeats, follow it through, repeats, follow it through, repeats. The same thing. We are not changing anything. We are just going through the same process. So in the narrow state, we look out for an entry. Here you can see this bull candle taking out this last. Let me make it a little bit bigger. Oops. So here we can see before this move started, this bull candle took out the last purple candle here above the 20 moving average. It took it out above the 20 moving average, and there it went. So I wanted to measure what this gave us. So from that point to this point, it gave us almost 170 pips. 170 pips. So with this, in the morning, you catch this right from 6. The move started 6:28. You catch this right from 6:28. You ride it until it's finished at 8:30. How many hours is that? 2 hours, 2 minutes. And you make so much money that you can make in a whole month if you are working for an employer. It's been 1,000, 2,006, depending on your account size. You make this money in the morning. What else are you looking for? What else are you looking for? So that is what I'm on about. If we get in at the right time, that things begins to happen, we get a good opportunity to enter. So sometimes this move will come, and then it has already moved quite a lot. So at the top here, it's in the white state, and then you see this green candle taking out this purple candle, and that's where you said, oh, let me enter. You are putting yourself in a very big risk. Already it is in a white state. Look at this. From the red line to the blue line, that's one big space. Then from the blue line to where price got to, another space there. So from here we say price is in the white state. We don't take positions in the white state. So as price took off from here, it went and then kind of consolidated here a little bit, and then took out this. So over here, when this candle took out this previous purple candle, you could have added onto your position. Here too is another place you could have added onto your position. Guys, this is a strategy that you know exactly when to enter. It's not about you what's the word? Hesitating to see is it right for me to go or it's not right. Here, if you enter the position here, price is above the 20 moving average. Price is near the 20 moving average. So you having this candle taking out this green candle, it's a high probability trade. This is a high probability trade. It's also near. And see what happened. See what happened. So even if you this, what we are doing here is purely price action trading. So if we consider the size of this candle, look at the size of this candle going across this area of key level, this key level here. So this is the 750 key level. Look at the size of the candle going through it. So because it's a strong area, a strong key level, it needs more power to push through. After it pushed through, look at the size of the candle that printed. It's just telling you the momentum is dying down. So I need to be careful what I need to I do from this point on. If you look at the size of the candle, it also gives you information that the momentum is dying down. Here it pushed through with a big candle. It went all the way up and then turned round. And then coming down again, look at the size of the candle that pushed through the same area to the lower side. That should tell you that this is a very powerful and strong area. When price broke below it, what did it do? It came back to test that key level before it went further down. Guys, follow this and then you'll be fine. This I'm showing you is very, very simple but powerful. It's very, very simple but powerful. Okay. Is it sitting well with you, guys? Let me know. If it's sitting well with you, it's making sense, let me know. Great. Let's see what's happening currently. What chart are we on? Okay, US 30. So US 30 is still pulling down. It's still pulling down. As I said, we are in an uptrend. So this happens to be a move as well, but we want to ride with the flow of the river. We want to ride with the big players. We don't want a situation where we get caught up entering and then things turn round. So even though if we played it here, price getting below the 20 moving average and then taking a sell here, we'll still have made some money. But I'm more on the side of us following it in the main direction. Yeah. So as I've said before, if you are okay and you know what you are doing, you can take some of these trades and then play it out. But again, you are much safer flowing with the main trend. So the reason we all know this is happening is price went into the Y state, and the moment it goes into the Y state, it always pulls back to the narrow state. So this happening here, we are aware that it will happen. We are aware that it will happen, but what we don't know is how far is it going to go. So that's one thing we also don't know. So if perhaps you are okay to take this risk, you enter here, you put in your stop loss above here. If it works, great. If it doesn't, you are coming out with that that tight stop loss you put in place, that you are not prepared to lose anything more than this amount. If it's 50 pounds, if it's 20 pounds, $20, $50, whatever amount it is, you are just prepared to lose this amount. So that is why we put in our stop loss. So you can play it as it suits you. You can play it as it suits you, but the best way is to follow the main trend and ride with it. Follow the main trend and ride with it. Okay, so now as we see, this is US 30. It's moving above the 20 now. So as it moves above the 20 and it gives us an event there, we can hop onto it. So what we expect is price giving us an event here to hop onto it to go to the upside. So normally in the in the narrow states, that's where we find price also doing what you call the trading range or price consolidating. So if you spot something like that and then it's been in it for some time and it gives you a clear setup, you can take it to ride it up. So with looking at the size of this candle, this first one and this one, it looks strong to me for a trend continuation. But we'll see if it gives us a perfect event there, we can hop on. The only reason is if I'm hopping onto this trade, the reason I would do that is looking at the size of these candles coming up. But the best thing we're looking out for a pullback, and then we see price taking out the last purple candle, then we can hop on for that. No rush, guys, no rush. Okay, someone said NAS. Let's see NAS. Oh dear. Sorry guys, I didn't check the charts. Or is it the one we had before? Or this happened? Okay, I think it just happened. This just happened. Yeah, nevertheless, if you see it, you know what we are looking at for. I don't have to confirm it for you. You know exactly what you are looking out for. So if you spot this, you can just hop on, even though there was a bit of wicks here up and down before this move up. So let's just go back to NAS and see if we can US 30 and see if we can spot an opportunity there. Okay, that candle has turned to green again. Yeah, so over here the best setup we had here was here, or probably on this one. But what I'm concerned about is the stop loss. Looking at this wicks, it would have had to be somewhere here. If we had left it somewhere here, then it would have been okay. But if you put it anywhere close by here, you get kicked out in no time. So even at this high, price is away from the moving average. If we had spotted it earlier, we could have gotten it here. Anyway, let's go back to US 30, which is, yes, we have a trade here. We'll get into this one. Let's see if this works out. Great, we are in. Stop loss, I'll put it here. Yeah, and then take profit. I'll aim at this high or here. So we are in the US 30 trade. We are in the US 30 trade. So guys, I know there's a bit of delay, so if you are watching your chart and you spot this, because maybe by the time I say it over here and then by the time you get to your end, it might have moved a bit. So if you spot this on your chart, you can boldly and confidently get into it, because that's what we are on about here. We want to build up our confidence and then do this by ourselves. Build up our confidence and do this by ourselves. So one thing we are on about is we are not afraid of losing, because our aim is to lose consistently. So if we lose consistently, the wins that comes up will overtake the losses, rather than you losing inconsistently. If you lose inconsistently, that is, you are on your way to blowing your account. But if you lose consistently, doing it by your maximum loss per trade, you are good to go for a long time. You are good to go for a long time. You are good to go for a long time in this game. So I believe those of us who entered this trade should all be in profit. So we'll wait for it to push up a little bit more, and then we'll move our stop loss above our entry to break even. So in that case, we'll be in a risk-free trade. No matter what happens, we take home with some money. We'll put some money in our bag and then run with it. Okay. So, still hovering around our entry. Still hovering around our entry. Also, as I've said before, if you go through the process, you tick all the boxes that you need to tick, and then you get a setup and you enter. Whether that works or it doesn't work, it's not a bad trade. If it works, great. If it doesn't, you follow the process to get your entry. You followed your process to get your entry. So you shouldn't let that beat you down at all. All you have to do is to follow the process. Don't keep your eye on the money. Follow the process and the money will come through. Yeah. So once again, we will do 1 hour 30 minutes today as well. So and once it's 4:30, I'll be signing off. Yeah. Any questions? Any questions? Guys, if you found value in this video, you can go ahead and share with someone who it will be of benefit to. If you found value in this that I'm sharing here, you can share it with someone you think will be of great help. To be of great help to as well. Does anyone have a question to ask? Okay, let's see what NAS is doing. Let's see what NAS is doing. Okay, so compared to US 30, which is moving up and down, NAS kind of quickly and swiftly moved higher. So where we've gotten to its previous high, where it got to before and then turned round. But as I said, our anticipation is price hitting this key level, the 17,950 key level. So far it's done more than half of it. The ideal condition was to get it here when it's pulled back to the narrow zone, but as it is here, price is kind of taking out this purple candle here. So it is wide away from, it's not a great entry. It's not a great place to enter the position. It would have been ideal if price, you got your entry near the blue line here. But if it's wide apart like this, anything can happen. It could be that this is coming to do a triple top and then push down, or as it's pushing, our target is here. That's what we have anticipated that it could likely to happen, but we don't know what will actually happen. So we could either take in an add-on position here and see how it goes. But ideally, it's on this area that price got there several times, twice now. This is the third time, but over now it got there, pulled back, and is pushing it again. That it got a probability that it will push through to the next key level. As we are in an uptrend, it got to go. So ideally, I would have preferred it pull back a bit away from this area of resistance. Then I can, if I get a setup, an event below where it is, I will comfortably take that trade rather than where it is. So US 30 is still doing some up and down movement here around our entry area. So we'll just wait and see. Let's see what SPS is doing as well. So SPS and NAS kind of already in the groove. So once this happens, US 30 is most likely to follow. It's down here, so it will most likely follow suit. Any questions, guys? Do anyone have a question for me? Put it in the chats. Let's look at it together. Yeah, we are back in money now. So US 30 should just push on. Where are the blowers? Where are the mouth blowers? Come on. That's just for fun. that in actual fact will not do anything, but just for fun, enjoying ourselves here. No matter the amount of blowing you blow the price. it will not respond to it. It will do what it wants to do and move when it wants to move. Yeah. Yeah, Lisa said she's blowing. Perhaps all of us should help blow it. Yeah. Yeah, you said to sometimes do things like this, and when it starts moving, it moves like crazy. When it's ready to move, it will swiftly move with no hesitation. So guys, this is the strategy. This is what we do. This is what I do to make money each day. Each time I sit to trade, this is what I look out for, just as I've explained in this video. So if you follow these steps that I've shown you, you will make money. Perhaps if you need any help, you can also get in touch, and then could arrange something for you, and then we'll see how it goes from there. Yeah. So as it went into profit, from where it got to before, like somewhere here, because it hasn't actually uh, it hasn't actually oops it hasn't actually beaten the previous record entirely. It just came around there and pulled back. So when this previous record of high points is broken, we can at least move our stop loss below here, just to lock in some profit in case the unexpected happens. We go home with some money. But again, I don't want to move it so soon. This trade will work, but so I don't want to move it so soon, then I get kicked out before it's actually moving the direction that we want it to go. Yeah. So over here we can see this candle is taking out another purple candle. So once that closes, and then it closes above it, now it's kind of pulled back again. Once it closes above it and shows signs of pushing up, this could be another area of adding on to your trade. At US 30 being held here, this, if you look left, this same area here, it got held up as it was pushing down from here and then dropped. So that's the area that it is in us now as we are. So hopefully it breaks through this area and pushes up further. But if all this up and down movement, you can move your stop loss just to break even, just to avoid any drawdown. So in that sense, you'll be in a risk-free trade. You'll be in a risk-free trade. Okay guys, so this is what we have. I've shown you how to do it. So you can do it on your own. Protect yourself, protect your accounts, and trade wisely. So on that note, I will say see you again next time, and have a great day, great evening. Thank you all for coming with me. Thank you all for coming with me today on this journey. So I will see you another time as we come live again. Yeah, so let's see how this trade works out. Thank you very much. So thank you. So before we go, seeing this wicks and this push-up, I will just move the stop loss above the entry to lock in the profits. So in case this doesn't work out, there's any quick turnaround, get home with some money. Yeah, thank you so much. I love you all. Enjoy your trading.